Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a relatively strong failure off of the highs. Very, very strong high side failure. The S&P was working its way higher here, relatively, okay. Not the strongest of moves in the world, but a nice grind higher. And we can see that they formed somewhat of a channel on the way up, but that channel broke out. And it came back, retested it, kind of proved that the sellers were interested there, retapped it, proved it some more, and the next time, this one right here, they came back, they dumped off of it with a humongous bear candle. I believe the technical term is ginormous. So with a very, very strong bear candle like that, I'm looking to go along with them, knowing that every single time we've hit that, we've rejected it, and now with that strong of a reaction, there's likely everyone in the move, and we probably won't come back to these highs. So my stop is going to go above the high here, and I'm looking for essentially just a 1-to-1. I'm only in this trade with one contract because the stop is huge. Right, we're in short at 1930. We're using a 7-point stop, so I'm not going to be looking to take 10 contracts on this one. It's going to be a little bit too heavy on the risk side of things. But in terms of the target, I also want to make sure that if I'm risking 7 points, I'm at least going to get 7 points out of the trade. So my objective is down at 23, which is 7 points down. So everything lining up with a 1-to-1 risk reward going right along with the heavy, heavy bears that we're seeing right now. We just need to see them follow through and continue this slap lower that they've already dealt out more than enough times off of that retest of the channel. There is a slight range that's forming up here, so we can see that range right inside here forming, quite nicely, and we are selling at the bottom of the range. But given that rejection that we saw off of that channel retest through here, this is looking more and more like a possible spike in ledge than anything else, which means that I'm anticipating a break back down to, the low of day. We're going for 1-to-1 here, but kind of you get the idea. We're looking for a break down out of this range to reverse us and kind of end as more of a range on the day. If we zoom out a little bit here, we can see we really haven't gone anywhere. Just kind of back and forth and back and forth. So that's the way that we're going to be playing it. So we're short at 1930, looking for a 1-to-1 move down to 1923. Seeing some nice bearish volume coming in here. We're one tick away from the target, so I want to make sure to reduce all of the risk on the trade here. So we're going to lock the stop in at 1926. And you can see, just because you're trading one contract doesn't mean that you can't make a decent amount of profit here. So everything looking really, really nice. We just need to see a little bit more continuation. We are seeing a little bit of weakness here, but, coming one tick away from the target, I don't want to give any of this move back either. So we are nice and strong to the downside. We just need to see a little bit more follow through. Likely we're seeing a little bit of bouncing off of that earlier swing right there. You can see that they're trying to tap underneath there and break through it. As long as we stay below here, though, we should be a-okay. We just need a little bit more from the sellers to kind of drive it home. Now, in terms of the downward movement, they did come back. They gave a break-even retest. So anyone who, maybe you were scalping this and you took a smaller target, probably got whipped out there. But a nice little re-entry, that little break out of the range, they pulled back to it and they ricocheted right back down. It's a nice setup to go right back short again with them. So the stop is locked in at 26. I'm still looking for 23. Beautiful move down so far. If we can get that objective to the downside, we're looking at a 7-point run, and if we get stopped out a little bit early, we're looking at a 4-point stop regardless. So either way, we make money on the trade, and that's exactly the way that I like to keep it. So we'll give it a little bit more time here, see if they can finish the drive lower and get our target at 23. Bears pushing back down again. We're back down to a double bottom on 23.5, and there they snap through it. We get the target, cancel that stop. Beautiful move down. That's exactly what we were looking for. Nice 1-to-1 setup, just going back down. Huge candle kind of means that I don't really want to take a massive position because it's a lot of profit at stake or a lot of money at stake. But going for 1-to-1 on this one allowed us to get 7 points down with a one-contract trade. So overall, a 7-point trade to the downside. That locks in for us $350 on the trade, and that's going to do it for me. So if you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com, and as always, we'll catch you next time.